Hi to IPO subscribers, welcome to eaglelive.ai. Today let us review IPO main board IPO of DHOOT Transmission Limited. Here we go on IPO review. This is the financial analysis of DHOOT Transmission Limited generated by AI powered software, and based on the inputs given to the software, this company has been classified as a healthy company. Let us see what are the financial strengths that made the company a healthy company. First, we go for health analysis. In health analysis, solvency is important. Solvency ensures the sustainability of the company. Sustainability of the company is very, very important. Here you can see all the financial metrics are positive. So, good, strong. Sustainability is strong. Coming to liquidity. Liquidity ensures the sustainability of the company. And here also, both are positive. So, very good. Coming to operational efficiency, only gross margin ratio, it is less than 50%. Of course, it varies from industry to industry, and it can be taken for a granted. It's not an issue. So that is also all positive. No financial irregularities. Coming to profitability, EBITDA 79.48, EBIT is 606.93, PBT is 515.69, PAT is 396.84, cash profit 519.39 crores, EPS 24.4 rupees, very good. EBITDA margin is 15.98, and net profit margin is 8.7, ROC 16.3, and ROE is 19.14. Good. Book value per share 129.17, very good. Coming to cash flows from operating activity is positive, and net cash flow is also positive. Coming to market value, the 871 rupees is the cap price of IPO, and based on that, we are getting a price earning ratio 35.69. It is at a higher side. It should be less than within 25. And coming to price to book value is 6.7. Even this is also very high. So it should be less than 3. So comparatively very high. And coming to growth indicators, only EPS growth is 0.37. Rest of the growth indicators of course sustainability growth rate is only 12.13. Doesn't matter. Otherwise, the company is working, good company, healthy company, and one can take their own decision. This is about the financial status of the company. Now let us go on IPO review. Hi investors, here is the IPO review of the company, DHOOT Transmission Limited. Let us see business overview. DHOOT Transmission Limited is a leading automotive electrical and electronics component manufacturer. Manufactures wiring, harness, and electrical distribution systems for both ICE and EV vehicles. Product portfolio includes wiring harness, high voltage EV interconnection system, battery packs, sensor and switches, controllers, connectors and junction boxes, data cables, and power supplies of cars. Very good. Good range of products. The company services critical automotive applications where safety, reliability, and performance are essential. Its exposure to both ICE and EV platforms provides powertrain diversification. EV adoption is increasing wiring complexity, creating a long-term opportunity for advanced harness and electrical system manufacturers. The company has a strong presence in electric two-wheeler and three-wheeler wiring harness segment. Coming to IPO snapshot, total IPO is 3,066.89 crores, fresh issue 1,400 crores, offer for sale is 1,666.8, price band is 849 to 870. Here, investors, I should tell you one thing. Out of 3,660 crores, the investors, the existing shareholders, that is who are selling their shares, they want to take away 1,660 crores from the total IPO proceeds of 3,066. What is left is 1,000 crores. Is the one you see, whatever the return you can expect, additional return you can expect only from investment of 1,400 crores only. So, fresh capital is mainly targeted towards debt repayment, subsidy investment, and new manufacturing facilities. Coming to fresh capital impact, the 1,400 fresh capital issue would potentially reduce debt and interest costs, strengthen subsidy balance sheets, fund new manufacturing capacity, support future revenue and earning growth. Based on the assumptions used in this analysis, the fresh capital could potentially add around 9 rupees 47 paisa EPS, taking estimated EPS to approximately 33.87. So if you add the 9 rupees 47 rupees to the present EPS, to the estimated EPS coming to 33.87 rupees. So after, in case that 1,400 crores are invested and the company earns something out of that, and we are estimating the EPS of 9.47 and total EPS will be 33.87. So valuation key investors concern. At IPO price 871, current EPS is 24, very good. PE is 35.69, PB is 5.81. Both are aggressively valued. This means investors are being asked to pay a premium valuation for the company's current earnings and book values. After potential fresh capital earnings impact, estimated EPS is 33.87, implied price earning ratio is about 25.7. So the valuation could become more reasonable if the expected earnings benefit from the fresh capital is actually achieved. Suppose if all the funds are invested, what could have been the position? No, here the chance is not there. So existing shareholders who are selling the shares, they want to take away about 1,600 crores. So if you are prepared to give them, okay, you can go ahead. Important, the 25, approximate 25.7 price earning ratio figure is an estimated forward adjusted valuation, not the company's current reported PE. Okay, high risk, high valuation at the IPO price, customer pricing pressure, competitive bidding may affect margins, receivables outstanding beyond 60 days require monitoring, related party transactions, litigation involving the companies and related parties, execution risk in new manufacturing facilities, benefits from fresh capital depend on successful deployment and in earning generation. Investors health check. Business quality healthy, industry outlook positive, finance healthy, fresh capital impact positive, promoter holding strong, governance just watch, current valuation expensive, adjusted valuation reasonable, current overall IPO cautiously positive. Final investor view. DHOOT Transmission offers a strong business with attractive exposure to automotive, electrification, and rising electronic content in vehicles. However, valuation is the key concern. At 35.69 PE and 5.81 PB, the IPO appears expensively based on current earnings. The fresh issue provides a positive catalyst through debt reduction, subsidy investment, and capacity expansion. If these investments generate the expected earnings, the effective valuation could improve to 25.7 PB ratio. So, one should hope for that. Our view, subscribe with caution. Good business, positive fresh capital, plus expensive IPO valuation. For long-term investors, the IPO may be considered for growth exposure, but investors should not ignore the premium valuation and should maintain a margin of safety. Eagle eye view, investor health sake, as always, investment decision should be based on your own financial goals and risk tolerance. Thank you for watching. If you found this analysis useful, please like the video, subscribe to the channel, and stay connected for more detailed IPO and stock market research. Thank you very much.